Hey, what's going on, guys? This is TerrenceRe, and I'm back at you with a weekly stock market update. This might be my best video on the weekend to date. So let's get busy. I got a lot of stuff I want to go over. Um, First of all, last week, I think the expected move, if I remember correctly, was somewhere right around 120, 130. I can't remember, something like that. It was a lot. This week, the expected move is quite the same. It's going to be around 10, 105. We'll round it up, say 106. So that's the expected move. And I expect the market to move. Excuse me. Now I expect it to move all of that, right? That doesn't necessarily mean it's going to go. It doesn't tell us what direction, but that does tell us that volatility is still high, and that we could get a lot of action, like either this way, then back down this way. Could get both. Because if we look at just last week in and of itself, look at Monday's range. Like from like you got Monday, the high was 52.50, and then the low was 51.19 in one day. That's a difference of 31. Tuesday, the high was 53.12, low 51.93. That's a difference of what, 119. We go on Wednesday, the high was 53.30 and the low was 51.95. So that's what, 135. So you got all of the expected move in one day on Wednesday, and almost on Monday and Tuesday as well. Same thing with Thursday, Friday, not so much. So this week we can expect volatile intraday movement, great days to scalp, to trade, like intraday, trade around if you're comfortable doing that. So you get a lot of scalping opportunities this week. Be safe and keep your size small. So this week we're gonna go over some things. I want to talk about. You probably have heard about the yen carry trade. Without getting, I am gonna play a clip from the All In podcast of Chamath Palihapitiya explaining, going over it. And basically, I'll let him go over it, and then I'm gonna come back and then do it, uh, give it to you in real easy.
I mean, I think these kinds of things, so I've never done them. And part of the reason why is I think these things look genius and they work until one moment in time where they stop working, and it stops working so severely that it becomes almost impossible to unwind yourself. And so
Okay,
you can
explain
get caught.
unwinding. Yeah, yeah.
Yeah. So I think typically in these situations, the thing you have to remember is you don't really make a lot of money in this trade. The way you make a lot of money is by leveraging this trade up. So meaning it's not like borrowing $1 million in yen and then swapping it to US dollars and then putting it in T bills is a real moneymaker. You're talking about 50K. That's not really going to move the needle. So what people try to do in these situations is do it on $1 billion and then lever it up 5 or 10x. The problem with that is that you're posting all kinds of collateral as margin to these banks to give you that leverage. Because then all of a sudden, capturing 150 basis points on 10 billion or 15 billion, now we're talking about real money. And so when these things go wrong and they happen very suddenly, what it does is it puts pressure on all other asset classes because people are scrambling to make sure that they don't get margined out. And what you saw over the weekend was it mostly a lot of that happening, which was a lot of these folks were putting this trade on to the tune of tens or probably even 100 billion plus dollars,
Wow.
of which they had maybe 5 or 10 billion of equity and 80 to 90 billion dollars of just margin. And that's what caused this very quick cycle.
Mm.
Then it looked like it unraveled itself. And so people thought, oh, we're probably mostly past this. I actually think we're not. I've said this before. I think one of the most interesting things I've learned in the last few years about the stock market is the stock market is owned by and large by these algos, right? Meaning there's these large, kind of murky, grayish hedge funds that have these computer trading algorithms that are allowed to be levered to the tune of, 13, 15, 20 times about $50 billion. So these folks.
All right, guys. So you want to catch all the rest of it? Go. I'll drop the link in the show notes. One of the best podcasts out there. My favorite one. I've been listening to it since I think they started it right around COVID. And I stopped it right there because one, I want you to go check it out. But two, I didn't need to get. I don't want to get into the algo conversation. That's a whole nother conversation. However, he talked about leveraging up. Basically, I'm gonna give you the simple uh, explanation of it. Borrowing money right now, the interest rates are at zero in Japan, so you can borrow yen. You can you can basically borrow money and then not have to pay back. Well, you got to pay the money back, but it's at a low interest rate, so it's real cheap. So get cheap money and then take the cheap money and invest it in expensive money. That's all you doing. So you could borrow cheap money there. You could put it in the stock market and buy something like Nvidia, Tesla, um, any type of Nasdaq stock or a biotech, anything. Or you could take the money and buy T bills with it um, at a 5% interest rate and make money there. That way, there are a lot of different ways. I don't know the way that these banks were doing it. They could have been, like I said, they more than likely, I think they were buying T bills, but not necessarily. They could have been investing it in the stock market. Now, when if that government, if Japan was to say, "Hey," which is what happened, we're gonna raise interest rates. Now that money that ain't so cheap that you borrow back, that you got to pay the loan back on. That's all that happened. Now I'm gonna show you on the chart how you can see it. Right. My thing is being able to see it and being able to act on it. To have all of this information and to be able to eh, and not be able to act on it is useless in my opinion. It's just useless information. Yeah, you know why it happened, but how does it affect you? And like here, I want to talk about how to make money. So let's go to now what I got pulled up right here. I'm gonna pull up a weekly chart. This is the future market for the yen. This is the Japanese yen futures. Now you can see this is a 3-year weekly chart. Each candlestick represents 1 week. Now I'm gonna throw some indicators on here just to make it so you can see it's been trending down, 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 down for the last 3 years. Down, 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 right? All of a sudden, let's say 1, 2, 3, 4, as 5 weeks. Look what happened. Boom. All of a sudden, we get this, right? He said that he doesn't think it's over. Neither do I. Because if we're looking at a chart, if I don't know what this is at all, and I'm just looking at this chart like a blank chart, and I see this and I look at this, I'm like, man, this is whatever this is, got a pop right here. Like this is the beginning of something, right? This is how I would see it. I'd look at this chart and be like, hey, I just want to get a pullback. I get a pullback and I'd get long and then watch it go up some more. That's what I would think. So I'm gonna show you also these are the yen futures. Now I'm gonna show you something else. Now, so you may say, yeah, you trade Forex. I'm gonna show you the same thing on the Forex. I'm gonna pull up Trading View. What I have right now, this is a chart of the USD forward slash JPY. This is the USD yen. Look at it. Don't it look similar to this? So how might I trade this if I was a Forex trader? You could get a pullback. I'm just talking hypothetical. I'm not telling anybody. I'm just showing you an action that could be taken, right? Back into here. And then if it was the breakdown this low right here, let's say you got like a bear flag. Now just go back and look at the yen. Look at it. This is crazy. I don't know what is this. October, December. This is a weekly chart. I don't be on Trading View that much, but so this look like, yeah, that's 2011. This is 2011 right here. 2012 is when the bottom was made. So you mean to tell me we've been doing this since 2012, right? Where you had a little bit of a down move in 2015, and then it started back up again. So this particular chart, just looking at this, is due for a retracement, and a nice retracement. I would say just back into here somewhere would make it normal if it just retraced half of the move. Guys, I don't believe, in my opinion, that this is over with. So I just, went over a couple ways to take advantage of that. Shorting the USD JPY, or um, getting long yen futures, right? Or trading the options, however you want to trade it. Also, I want to show you something else. This isn't going to be a long video, but I think it's an actionable one. I think this is a great video, if I do say so myself. TLT, the bonds. This is a chart of the bonds. The bonds have been getting killed. I'm gonna put up a 5-year chart. These are bonds. Down, 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 down. All of a sudden down here, we start to make a bottom. We even get divergence on our momentum oscillators. We're making lower lows on the chart. So I'll show you what I'm talking about. Got lower lows. See? And on the oscillators, we're making higher highs. What generally happens when we get that? We generally at some point get a reversal, right? Look where we at. Look at this. So you're saying like, well, for me, all this is telling me what bonds getting ready to break out looks like, in my opinion. Um, when you have something like this is in order. First of all, let me explain it like this: in order for bonds to go up, because bonds have been going down, because rates have been, especially the past couple years, when they started raising interest rates, you have a lower yield. Excuse me, you raise interest rates, you have a higher yield. So it entices you to save money or to invest in treasuries. Well, if bonds begin to break up, that's telling us that at some point they're getting ready to cut interest rates. So if they're going to cut interest rates and bonds are going to go higher, next thing you got to ask yourself is, why are they cutting interest rates? If the economy is so good, if they're telling us that the economy is good, we should be able to handle 5.5% interest rates, or 6 or 7 or 8, with a strong economy, which is what is being said for the most part. Now I understand, like, you got two sides of the political field, and I don't try not to go too heavy into politics. I really don't care. You're not going I'm not gonna argue with you about two sides of the same coin. Like, but I will say this: Democrats are touting a strong economy, and they're telling you that the economy is great. Well, if the economy is great, then why are we getting ready to cut interest rates? That's what the stock market is telling us. That's what the betting market is telling us, is that sometime in the next um, few months, maybe by the end of the year, that we're going to get interest rate cuts. There's no reason, when you have a strong market, to cut interest rates. I just want to go ahead and put that out there. So if they're getting ready to cut interest rates, then that's telling you that our economy isn't as strong as they say it is. And you can't say it's just the stock market, right? I'm going to go back to the SPX. I don't want to hear, because the stock market has been going up and just continuing to go up. This is a 5-year weekly chart. You can't you can't tell me that you have 1, 2, 3 down weeks and it's panic mode. If that's the case, then we really in trouble. So why are they getting ready to cut interest rates? Or why are they dangling cutting interest rates out there? That's because there has to be something. Um, there has to be some, either someone's lying. Ain't no either. There's no other. They lying to us. Period. We're being lied to, and the economy isn't as strong as they say it is. And that's what we're able to. I just gave you a little bit of information by letting you hear Chamath Palihapitiya explain um, the yen carry trade a little bit, and but I can show it to you on the charts as well. If you can read the charts, you can tell what's getting ready to happen in the market. But it doesn't hurt sometimes to have a little backdrop. And I wanted to put somebody on there that's credible. All four uh the people that that are on that podcast are super wealthy. And I say super wealthy, I mean super wealthy. So Chamath may be a billionaire. I'm not sure. If he's not, then he's on his way. I think he may be worth a billion. It's David Sachs is close to it. They are super wealthy. So it's a great podcast, in my opinion, to check out. But hey, guys, if you got something out of this video, I didn't even go over the stocks I wanted to go over. I'll put a video out tomorrow. I don't want this video to be so long. So tomorrow we'll go over some of these stocks um, for the market. And that's that, guys. Hit that like button, hit that subscribe button. And I appreciate your time. Thank you. Peace.